So I'm very excited to be here. I'm always incredibly interested in the fantastic research that comes out of this centre. So it's this is a real wonderful opportunity for me to speak to you about some of the work I've been doing, and I'm very interested in your perspectives and thoughts on it as well. I'd also like to acknowledge the Ngunnawal people and pay my respects to elders past and present. And hopefully, Anne, I promise the last time we heard this, the research has moved on a bit. So my research focuses broadly on policy advocacy, on interest groups and political participation. And most recently through my DECA research, I've been looking at the mobilisation of consumers and investors on significant global problems, including modern slavery and climate change, also First Nations land and cultural rights and migrants' rights. So for today's talk, what I will be doing is looking specifically at social movements, mobilisations of investors. So there's a lot of research around on ethical consumerism and boycotts and boycotts, but we know significantly less about the way social movements mobilise investors. Of course, this is not a... Sorry, just checking I can move the slides.
Yeah, you do.
Oh, yeah, great, thank you. It's not a new form of participation. Expressing political values through investment decisions has formed an important part of a lot of social movements, most notably a divestment campaign in the 1960s to protest apartheid in South Africa. There's a long-running and somewhat controversial campaign of boycott, divestment and sanction against Israel. More recently, we've seen a lot of calls for divestment of Russian industries and from companies operating in Russia to protest their invasion of the Ukraine. And in Australia, a more local public case of shareholder activism followed Rio Tinto's destruction of culturally significant sites in the Juukan Gorge region. What we saw there was a shareholder revolt and significant shareholder pressure that ultimately resulted in the resignation of several senior executives. But when I began investigating investment-based political participation in the Australian context, what I discovered was that this wasn't particularly well conceptualised within political science literature. It was recognised as a form of sub-politics or private politics, which is directed at corporate or private actors rather than at the state. But we lacked a coherent terminology to discuss this form of participation, and also a categorisation or a typology to capture the diversity or the range of investment-based participation. So the initial aim of my research then became to conceptualise investment-based participation, and today I'll be talking through a little bit about what the problem is with existing conceptualisations. Sorry, let's see. Oh yeah, just sorting out the picture in the room. Thank you. What is the problem with existing conceptualisations? I'll be introducing the concept of political investorism and talking about how that might alter our current understandings of market-based political participation. I'll talk about what this looks like in the Australian context and discuss how the state is intertwined with this form of participation. While it may be a form of private politics directed at corporate actors, it is still very much central to how we understand the state's involvement in political participation. So what is the first problem with current conceptualisations? And really we begin with the problem of terminology here. When we look at investors and types of investors who engage in political participation, we see quite a broad range of actors. And I've defined investor fairly broadly here to go beyond your traditional shareholders, but to also include superannuation fund members who may not be shareholders in a traditional sense, but nevertheless have a financial stake in a fund, which is itself an institutional shareholder. So if we consider investors, or define that group more broadly to reflect those who have and can wield a financial stake in a firm, in a fund, or in a financial institution, we get a sense of who can actually express their political values through investment decisions. And then, of course, there are a number of different actions that they can engage in. Some of the ones we might be more familiar with would be divestment campaigns or traditional shareholder activism through signing on to shareholder resolutions that are filed at annual general meetings asking companies to take a particular action. What we also can include in this is boycotting of banks and other financial institutions like insurance companies, direct lobbying of superannuation funds by their members, and discursive pressure through naming and shaming campaigns. So when we look at the breadth of actors and actions that are involved in investment-based political participation, none of the existing terminology really effectively captures this. We do, of course, have terms that have been used to describe this in the past. Shareholder activism is perhaps the most commonly used and commonly recognised term, but it is not inclusive of a broader range of investors with a financial stake. It, for instance, does not capture super fund members and their activism through their super funds. Corporate activism is another word that's often used, or a term that's often used, but this is also used to describe corporate political activity or corporate political advocacy, which really means corporations lobbying the state. Perhaps we get a little bit closer to an accurate terminology through socially responsible investment or ethical investment. But the problem with these terms is that not all investment-based political participation can be considered socially responsible. And what we consider to be ethical is deeply subjective. So, for example, in the 1990s, conservative Christian groups in the United States engaged in a Disney divest campaign to protest the fact that Disney as a corporation had begun to recognise same-sex couples in their workplace policies. So we need terminology that captures the full scope of actors and actions, but also terminology that doesn't impose an initial value judgment on the action as being ethical or responsible. So I prefer instead to use the term political investorism that does bring together those different types of actors and tactics and also avoids that value judgment on the ethics or the responsibility of the act. So I define political investorism as the individual or collective use of a financial stake to express political values. And this language is also very specifically chosen to serve as a partner concept for the more commonly understood participation of political consumerism. So more broadly, we describe that as ethical consumerism within the political science literature. The preference is for political consumerism. And the reason I think it is useful to have a term that is clearly related to political consumerism yet distinct is to demonstrate their relationship to each other whilst also distinguishing between consumers and investors as political actors. So this is for a few reasons. I feel that consumers and investors have quite different reach and leverage when it comes to their political participation. So, for example, political consumerism is most often directed at retail-facing industries. So, for example, fashion and food. There are not a lot of ways that someone can participate politically as a consumer to, for example, protest the establishment of a new thermal coal mine. They can engage in traditional forms of political participation, but they can't use their consumer power to target or lobby that industry. Investors, on the other hand, are engaged across a much wider spread of industries and have a greater reach in that regard. Another way in which I think these actors differ is in terms of the extent to which consumers are often locked into structural arrangements. So, for example, even when trying to express their political values through food shopping, the duopoly of Coles and Woolworths in Australia, or supermarket chains around the world, often limits the choices that consumers can actually make. Investors, yes, in some ways are locked into structural arrangements as well, but have a greater capacity to simply choose not to invest somewhere in a way that consumers often don't. They need to meet certain essential needs in terms of food, clothing, energy, for instance, that investors don't have those needs in quite the same way and therefore have greater options. So in establishing this concept, what I'm essentially trying to do is to reconfigure the way we view market-based activism as political consumerism and political investorism as related and partner concepts that have their own identity, own structure and own typologies. So what I'm really doing with this conceptualisation is extending Van Deth's concept map of political participation. And to test and develop this concept, I worked with extremely lovely colleagues and wonderful colleagues to map political investorism in Australia through a pilot study. And what we looked at here were 6 key case studies using process tracing and interviews to consider how this form of political participation operates in Australia. What we, and I realise I've thrown a lot of information on the screen there, sorry, I'm going to move on quickly, but I will be talking through some of these cases in the rest of the presentation. What we found in mapping political investorism in Australia is an initial typology of different types of tactics or strategies that investors were using to express their political values. Now, I must stress this is not exhaustive at all. It is very much an initial typology, and I've actually been very interested to see some new research recently published that looks to extend this in different ways and look at other ways in which investors are expressing their political values. What this also highlighted for us is that a lot of the tactics are not mutually exclusive, that even within the scope of investors' political participation, some social movement organisations are using a suite of these tactics together, a repertoire of contention. So a good example of this is what an organisation called Market Forces has been engaged in to try to reduce reliance on fossil fuels to address climate change. So one of the strategies that they've taken with this is shareholder resolutions to mining companies at their annual general meetings. Another strategy has been using discursive pressure by mobilising super fund members to ask their funds to divest from fossil fuels. So, for example, some of you might recall or be familiar with the Uni Super Divest campaign, which is supported by Market Forces. Another strategy they took around discursive pressure in particular was something called the Adani list. Now, this still exists and you can find it on the Market Forces website. What they did here was list every company that might be involved in the construction of the Adani Carmichael thermal coal mine in North Queensland. They also listed every bank and insurance company that might finance the mine, might insure the mine. And they asked their supporters to send emails using a online system, sort of fast activism style, to send emails to these companies threatening to boycott or threatening to withdraw their custom as their banking or their insurance policies if these companies were involved in supporting the Adani Carmichael mine. Now, it's very difficult to assess causality in these sort of actions. I'll talk a little bit about that later on. But what we did end up with is a scenario in which pretty much every bank and every insurer in Australia explicitly ruled out involvement with the Adani Carmichael mine. We don't know if it's because of the Market Forces campaign or their own financial risk assessment. But the campaign was successful enough that it triggered former Prime Minister Scott Morrison at the time declaring that he was going to ban these sorts of secondary boycotts by environmental activists. And I'll return to that a little bit when I talk about the role of the state. In terms of this kind of action, what we also found in mapping political investorism was 2 key hallmarks of all of these actions that we relied upon to classify acts as political investorism. And these seem pretty obvious. The act must be politically motivated and the actor must possess a financial stake. But in the context of political investorism, this can actually be quite complicated to determine. So, for example, one of the cases we looked at involved this gentleman here. His name is Mark McVeigh. He sued his super fund, Rest, asking them to disclose the financial risk that climate change would pose to his retirement savings that were invested through the super fund. Now, he did that with financial backing from Friends of the Earth, which is an indicator to us that this is obviously politically motivated about climate change. He also has been very public in the media talking about the fact that his retirement savings is not his primary concern. His primary concern is the climate crisis and the need to significantly accelerate action on climate change. However, in order to use his financial stake within the super fund to take that legal action, he had to frame the case within the context of the financial risk to his savings. So in cases of political investorism, because of the fiduciary duty that firms and funds owe to their shareholders or to their members, activists are often in the position where they have to make the business case first and the moral case second. So we see quite different framing in political investorism than what we would see for a consumer boycott, for instance, where you don't need to explain the financial implications of why you want to boycott a particular product or company. What we also looked at was the importance of a financial stake and the different ways in which that might manifest. Because as an investor, using that financial stake is a way of using your insider status to put pressure on an entity. And what we found is that the way that insider status is used is quite different in different cases. One particularly interesting example was a shareholder resolution that was organised by the Australasian Centre for Corporate Responsibility against Coles about the use of modern slavery or significant labour exploitation in their horticulture supply chains. In this case, what ACCR did was gather shareholders together to sign on to the resolution. What they then asked some of those shareholders to do was to grant their proxy as a shareholder to farm workers who had experienced exploitation directly. By granting your proxy to someone at an annual general meeting, the importance of that is that it gives them the right to speak at the annual general meeting. So rather than having a protest group outside the AGM, or what we've seen many times is protesters crashing an AGM and trying to speak but having no right to speak in that space, what this organisation did was ensure that the workers who'd experienced the exploitation would be given that insider status to have that right to speak in that forum. The shareholder resolution in this instance wasn't passed, but did lead to Coles promising to engage further with unions and to investigate cases of forced labour in their supply chains. In terms of that insider status, what we found was that by conceptualising investment-based political participation more widely is that it did actually begin to challenge some of our assumptions about insider and outsider strategies in political participation. So shareholder activism has always really been assumed to be an insider tactic, but when we mapped political investorism cases against Colley and Adrianson's really excellent framework for insider and outsider lobbying, we found that this was more complicated. If you look at the tactics alone, it's pretty straightforward. Shareholder resolutions, positive and negative screening, legal action and divestment, these are all insider strategies. And discursive pressure, naming and shaming campaigns is an outsider strategy. If you look at the actors, and the status and positionality of the actors who are engaging in this form of participation, it becomes a little bit more complicated. Some are straightforward. So existing shareholders of Coles, for instance, are insider activists. The civil society organisations like ACCR or Market Forces are outsider actors in this context. Some of the actors defy neat categorisation. So, for instance, a superannuation fund member is an insider in their fund, but they are not an insider of the companies that their super fund is invested in. They don't get to vote. Their shareholding within that, the institutional investor or the super fund, has the power to make the decisions as an insider in that context. But the super fund also owes a certain obligation to their members. And so the members are not quite insiders, but nor are they outsiders in this context. We then found one particular actor that required a new category altogether. So one of the strategies that social movement organisations have been using when mobilising investors is to explicitly ask some investors to purchase shares in a company solely for the purpose of putting political pressure on that company. So asking people, for instance, will you buy shares in Whitehaven, Woodside or Rio Tinto or BHP so that you can sign on to our shareholder resolution and put more pressure on the company. And asking people, don't be interested in the dividends. It's not about the money. This is about gaining that insider status. And so what we found with this type of new shareholder was that they were essentially an unnatural insider. They were acquiring that insider status artificially, purchasing it and procuring it. And it really reflects a very interesting approach that political investorism generates in the ways we think about participation. So in Australia, we have a corporate governance rule that you must have 100 shareholders to sign on to shareholder resolutions. That's different in the US, where you only need one. In Australia, you need that unique 100. So often what you need is someone who owns 5 shares in Coles, someone who has $500 worth of money invested in BHP. But if you are procuring those shares just for that political participation, it's really supporting a notion that some of the organisations promote, which is that you should invest and participate. There's a tension in political investorism and the social movement organisations who engage in it between divestment, so the message to divest, or the message to invest and participate. And what we see with some of those organisations who promote invest and participate as their message is that they really see companies as, and they have described them as, a participatory democracy. Now, I don't subscribe to that view myself. I think it's certainly not a democracy in the way that we would traditionally see it. But that position of a participatory democracy is really explaining their approach to purchase the shares, invest, don't divest from these companies, stay in and try to change their corporate governance approach from the inside. Some of the organisations are also doing this in a really interesting way to try to get more non-traditional activists engaged in these specific spaces. So, for instance, Share Action in the United Kingdom, I know this is moving away from Australia a bit, but the research has spun off in many directions. The Share Action in the UK has in the past purchased shares for certain individuals to make sure that, for instance, a climate scientist is able to be a shareholder of a company, has the rights to speak in an AGM, or that people who don't have the means, because the price of admission for this type of participation is obviously quite high, for those who don't have the means to purchase shares but are directly affected by climate change or have experienced labour exploitation, can have shares, have the money to purchase the shares to give them that insider status to bring different voices into the annual general meeting. So it's being used in a way to sort of diversify the participation within that corporate structure and with that insider status. This more complicated strategy or dynamic with insiders and outsiders is also evident in the ways that we see direct and indirect lobbying taking place. So insider strategies are most commonly associated with direct lobbying, but what we're actually seeing here is insiders engaged in indirect strategies. And I popped that up. I realise there's a complicated snapshot, but of two particular cases that focused on the Australian government's policies on migrant detention. One in particular, the HESTA Divest campaign. HESTA is a super fund predominantly for care workers and nurses. What we saw here was a campaign mobilising grassroots support from the super fund members to put pressure on the HESTA board to divest from a company that held the contract for offshore processing of asylum seekers and refugees. Now, ultimately, the target of this activism is Australian government policy. It's not even specifically the company that they were seeking to divest from. And this is a dynamic that we see in a lot of political consumerism and investorism campaigns, that they seem to emerge in instances where the government is unwilling or unable to act on particular issues. So when we think about the factors that shape political investorism in the Australian context, the state is very important in this. Some of the factors are corporate. When we look at targets that are purely corporate, yes, we can see that some of the governance structures, like having to, as I mentioned, having to have 100 shareholders signed on, does mean that we get a unique flavour in Australia of having greater levels of participation or involvement in those shareholder resolutions. The growing strength of our super fund market also sets us apart here in Australia. Our superannuation funds currently own approximately 30% of the Australian Stock Exchange, and that is going up. So as large institutional investors, they have a significant amount of power. So our political investorism campaigns target super fund members to build that grassroots support to try to change the super fund's policies on investment to ultimately have some impact on corporations. But the state is nevertheless a key and significant actor. What we see is that sometimes the state is actively incentivising political investorism. So, for instance, on the issue of modern slavery, the Australian government has introduced a Modern Slavery Act that requires corporations to disclose what they're doing to prevent forced labour in their supply chains. The policy is explicitly written to say that consumers and investors will be the accountability mechanism for that act, that they will hold corporations responsible. I have a lot of criticisms of that, which is an aside, but explicitly asking shareholders and investors to be activists in this space and to participate and to punish or reward corporations. We also have is a new treasurer, new treasurer saying we need a values-based capitalism. Now, it's hard to imagine exactly what that means and how we are expected to achieve that, but if values-based capitalism is an aim, then values-based investment is a part of that as well. On the contrasting perspective, we have previous government in Australia which viewed political investorism as a threat. So Scott Morrison, as I mentioned, tried to ban secondary boycotts by environmental activists, describing them as indulgent and selfish practices, as an insidious threat to Queenslanders specifically in the case of the Adani Carmichael mine, and apparently investor activism is going to deny the liberties of Australians. What this government also did was try to prevent proxy advisors, which requires a bit of explanation, but tried to prevent actors that guide investment decisions from considering environmental, social and governance or ESG concerns in their decision making. What we're also seeing is a significant backlash in the US to socially responsible or ethical investment that does try to consider ESG concerns. So a number of governors of the US have instructed their pension funds that they are not permitted to consider environmental and social issues in making their investment decisions. And there's currently a congressional hearing into whether or not investment firms and funds can be banned from considering environmental and social issues, predominantly as a backlash to campaigns to divest from fossil fuels. So I realise I've talked through a lot of this very quickly. I apologise and happy to explain any of the more boring aspects of investment. What part of this is published already? Part of this is work in progress, and there's obviously future directions that I'm keen to get perspective on. Looking at some of the transnational elements in organisation and mobilisation. Of course, investment is a global market. We have a lot of foreign investors in Australia who are engaged by social movement organisations overseas to participate in these campaigns. I'm interested in the framing in calls to action, whether or not that these campaigns are taking an approach of the political cause as opposed to people's individual retirement savings and the financial risk posed there. I'm also particularly interested in the dynamic between progressive versus reactionary political investorism campaigns. The majority of them are on progressive social issues like climate change and human rights, but there are also these reactionary campaigns, for example, the Disney Divest campaign, and also a backlash to these sorts of efforts. And as ever, I'm always interested in the role of the state and how it's intertwined in this form of activism. So thank you so much for listening, and I'm very interested in your thoughts on this. Thank you.